Hello traders, welcome to my channel. I'm Francesco and the channel is FreeFX. Just wanted to say that I'm really grateful for your support, and since joining the Trading View Publish idea, I've actually been getting a lot of views on my channel on YouTube, so I'm really supportive, and some comments as well. Thanks very much, I really appreciate it, and also want to hear more from you because that really makes it more enjoyable than just me kind of posting and stuff. So today we're going to talk about EUR USD. You can see this is a really long trend channel. It's coming from 2008, the great financial crisis that nobody can forget ever in life. And we can see that once we had that huge surge and then the huge drop that we saw post that, we kind of had this huge channel, and I actually sort of update it every once in a while. And I got to this point, and basically if you kind of extend that line, if you take it short to here and extend that line to this point there, you can see to the left we don't need it, to the right is really good, because that really shows you actually what happens from that point on. And so you can't really sort of influence that, because at the time we didn't know that this was going to continue, because obviously there was a shortfall. So price, this is kind of the average line, so the middle line, and that's kind of your mean reversion, if you like. You can see prices are returning to that and not really getting up to the channel top, so we call this a shortfall. And then it took a while kind of towards the middle line and then back up. Now if we didn't extend it as I've done, you might have thought that at this point here in 2018 we're coming to like a 10-year cycle, if you want to call it that, and then it was going to basically just drop off the face of the earth, but actually sort of held and it came back up, so towards the 120. Now you can see that in the recent few weeks we've actually had this level really holding like a strong resistance, and we come down from it. So actually we've come back within the range of the channel, which is quite huge. I mean, if you take it top bottom, it's quite big, like 127 there and 157. Yeah, so that's huge. So that means we've got like a lot to play with. And I would say as well that this is basically now quite near the top. If you look at previous that's really close there as well. In 2014 we had a few months, February, March to May, so like 4 months of sitting there near the top and then coming down. So we've been there since August, September, October. It's been like 3 months, so maybe we might see the same as in 2014 and come back down violently. A huge drop there. So actually we don't know that, so we have to see and what happens. Now obviously for the day we want to look at kind of intraday as well. So we came down here beginning of the week, we kind of came quite a bit down from there. End of last week we were in the sort of 118s, down 117s, and we come down all the way to the low 116s, almost pretty much 116. Now today we had a huge rise. Now ignore these bars at the bottom, because this is a daily FX chart's own client data in terms of like volume, so it's like retail volume. And we've got this just for daily FX clients, which is actually IG is the broker, so it's IG data. And then basically we come up here to, we are currently just sitting above 117, 117.08. And I really wanted to know exactly where to go from there, because I thought this might kind of stop at 117, resistance, come back down. So, but I didn't trade a move up because it was quite close when I opened up my station this morning, and it was kind of 116.80 anyway. So if that's too close to buy, I'll wait for a sell or maybe buy above 117. You can see that on the 1 hourly chart we're actually quite sort of doji-like at the moment. So if I go to the future side, now if those of you who actually don't know how I do this, is I kind of always look for other proxies for volume. So basically, because we don't have centralized market for spot FX, we need to look at futures FX and options FX. So I look at both. For today I'm just going to look at futures with you, so I make the video nice and short, but that essentially is where we've been this morning. Now before this candle formed on the hourly here, just where I'm pointing, we had essentially a fading volume. So right from that point we had a fading volume at, this is Chicago time, 2, 3, 4, and this hourly was also started with a lower volume, so it was like a 4 volume bars progressively lower. So that's like a fading volume with a rising price. If you read about volume, if you look at something like Anna Cooling's book on volume, trading with volume, and look at Wyckoff or Wyckoff's volume principles, always look for rising price and rising volume for confirmation of trend or an up move or a down move. If you've got divergence, so fading volume with a rising price or vice versa, then you shouldn't really follow price, but wait for confirmation, etc. So you can see that with fading volume there, price rose from the low 160s to 117 and past, and then we can stall there, big wick there on the hourly, and the futures slightly lagging behind. We're just about kind of 10 pips behind spot FX. That's saying 117. Spot FX is 117.07, 17.15, 17.07. So about 8 points behind spot FX. But basically, you can see this red candle forming there. Here it's not red, it's kind of like the hourly, sort of more like green. But essentially, they're both showing signs of indecision. There was a surging volume there, but obviously we're now possibly on a selling side. So we kind of stole the 117 again. Remember that we've been on this for quite some time. Going back to the spot FX chart, the daily there, we had this little candle here. But if you look kind of more long term, from the kind of midsummer, July, August, from August, we've had basically what started to look like a head and shoulders pattern there. Left shoulder, head, right shoulder at a tilt, or maybe this, the head and left shoulder and right shoulder. That's actually a failed pattern, because this looked like it was materializing. We dropped from 118.25 to 116 for a 200 pip drop there, mid to late September, and that actually didn't materialize. We stopped at the low 116s. We're back to low 116s, a month and a half after, so it's not really progressed much. The top there is 118.60, just like it was back here in mid-September and back here in late July. So we're kind of stuck really between 119 something and 116 something. Now you might say, well, that's a 300 pip range. I can do that. I can trade that. But actually, it's not really, because it's been quite choppy, and it's been a much shorter range within these time periods and these time periods. We've actually gone down. If you look at the size of this area, and the size of this area, we've actually kind of gone down. So the top now is 118.60, whereas in sort of August and early September it was 19.50. So the top has actually come down a bit. So overall, if you wanted to really get the bigger picture, I would suggest you go to like a weekly and see how that looks on a weekly. And even better, if you use the clothesline instead of actually doing the candles, you can see that that's kind of how it looks from July, that surge there. There's quite a sign of uncertainty, and we've looked at the monthly before, so we know that it looks like that. But essentially, we've kind of back to the same levels as back in 2017. And so if you look at past price as a way to confirm where we might go next, 2017, this hump here was a kind of forerunner of surge up to 124. On the bigger one that was showing you earlier, if you do a fib retracement from the top here to the bottom in 15, this level where we're at now, actually below that, is the 0.23 fib retracement of this big move. That's the zero level, that's 0.23. So essentially we're just, I might get the numbers slightly wrong, but basically it's like a fib retracement level there, and also the top of the channel. So it's like a big confluence of technicals. You can try to justify it with like fundamentals and say, well, it's because of the euro, because of the ECB, it's because of COVID, because of the US elections, because. But essentially it's really hard to kind of pinpoint the cause of that. And if you wanted to just say, well, prices use non-random patterns that repeat themselves, but it's no coincidence that these technicals work, but you always got to trade what's in front of you. At the end of the day, if you might sort of say this is going to go up at this point, you might justify saying June, July, well, look, it's surging up, it's going to go past this and carry on and return to the next fib level or whatever. That didn't happen. So now the reality is that we are where we are. So hope this was useful. Keep an eye on USD and my next videos. Thanks very much for watching. See you in my next video.